So where are the next growth markets? Over the past 12 months, we've seen the market jump between 15 and 30%. Some markets have gone 50, 60%. Now, picking the markets is going to be much, much harder in going into the future. Now, what we've been paying attention to is affordability and the flow of people. Where are people coming from and where are they going to? Now, I have got a contentious point of view on this, but it can be corroborated against some of the most recent articles and data that's come from CoreLogic and some of the industry professionals that are out there. Let's minimize my face and talk about that. Now, Eliza Owen, she's been on our podcast quite a few times. Shout out to Eliza and CoreLogic team have some of the best data, property data out in Australia. From February 21st, the Australian government opened the borders and watched double vaccinated tourists and visa holders from around the world come into Australia. Overseas arrivals totaled nearly 200,000 people in December, which is much, much larger compared to December last year. Now, we've been talking about opening borders, tourism, students, and migration for quite a while. And it really is about paying attention to where they're going and what impacts they will have. So here we are starting to see people come into the country. And the interesting thing to pay attention to here, in the past 5 years prior to COVID, ABS data suggested Australia would see around 1.8 million overseas arrivals per month. Now, December 21 arrivals were only 10% of December 2019 pre-pandemic levels, but this will start to change and it will start to increase. The important thing to note is, where are all of these people going? And what we can see here is, for those migrating into Australia, which are meaning to stay in the country for the next 12 to 16 months, where do they typically go and live? Historically, the ABS data shows 45% of overseas migration settle in 10 regions across Australia, predominantly in Melbourne and in Sydney. So have a look here. We've got inner Melbourne, southeast Melbourne, west, inner southwest Sydney, Parramatta, south and inner south Sydney, and then inner east and inner northeast as well. Melbourne and Sydney dominate the overseas migration charts. And we also see quite a huge amount of tourists and students coming into the country as well. So these are the areas that are going to be most heavily impacted in the short to medium term. Now, it's important to talk about this because we saw the impact that the interstate migration had on markets around Australia. When COVID was in its peak, we saw 40,000 people move from Sydney and Melbourne, and some parts of Australia as well, flood up to Brisbane. We saw limited levels of supply, and that Brisbane market jumped 25 to 30%. So what we're now saying is, where can we see these strong growth numbers? Let's have a look here what was most heavily impacted in these inner rental markets. Rents across the inner Sydney and Melbourne wound up with peaks to trough of declines between 12 and 11% respectively. So during that time, inner Melbourne, during COVID, absolutely copped a hiding. 12% decrease. Change in rent values since March 20 over here again. You've got Sydney. The city inner south, again, copped it. So these markets that we're talking about, which are most heavily impacted by international migration, were most heavily impacted during the COVID times. Now, we anticipate a similar but inverse effect once the borders open back up again, which means people that are investing in these markets will see sharp rental increases. But also, the other thing that goes in our favor is these markets also show some of the more affordable options for people to then buy. This is the vertical living apartments and townhouses. The market has largely run due to the growth that we've seen in land and houses. Now we're now facing the largest spread between houses and apartments that we have ever in the Australian market. And once we start to see interest rates increase, we will see a shift in people's demand going from houses and larger pieces of real estate to something that's either smaller or further away. So these are the markets we want to be paying attention to. This is a great article from Eliza. I won't go through it all, but I will encourage you to jump in and have a look. Okay, so this is another article which has recently been written by Larry over at the Financial Review. And he goes on to talk about vacancy rates in Melbourne and South Bank having dropped below the 2%, as students, retirees, young professionals return to the city. Now, this is, again, a contentious area because a lot of South Bank, inner city Melbourne, this is what you're looking at. Lots and lots of apartments. And I'm certainly not saying that you should go and buy in one of these massive towers. But what I am saying is that these markets were most heavily hit during COVID, and there may be some select opportunities in these markets as the market does start to recover. This is in a way counter-cyclical investing where we still can achieve some really good discounting. We can find some certainly affordable options for people that simply cannot afford to buy bigger homes. And we have the additional benefit that in the short to medium term, certainly short term, we are going to see spikes in the rental growth, increasing those yields. And with an environment where interest rates are increasing, we certainly want to have good income producing assets. So Larry goes on to talk about the impact that the COVID had during that time, where unit vacancy rates spiked up to almost 12%, but now have bounced back significantly and are below that 3% balanced vacancy rate. So to think about what that is, 3%, if there's 52 weeks in a year times 0.03, that means the property would be vacant for less than 2 weeks in the year. So the other interesting thing is that unlike previous cycles in 2016, 17, 18, there was a massive spike. So after peaking to close 20,000 new apartment completions in 2016, this number could fall to less than 1,000 by 2024. This is due in part to many developers putting projects on hold during the pandemic or scrapping them altogether. So that's interesting. During the last boom, we saw a huge amount of supply come onto the market. This is where these towers all came out of the ground. But now because of that last dip and then also the pandemic, a lot of the developers that were in that market pulled the plug, either stopped the site entirely or certainly delayed it. So that means for the next foreseeable future, we will see a shortening in supply. So there's going to be less stock on the market, similar to what we saw in a Brisbane cycle just recently, last 12 months, but then also an increase in demand from people internationally looking to come into Australia, certainly suck up a lot of that rental demand, but then also in time look to purchase and be a part of it. Also, you've got students and also you've got tourists. So there's going to be an opportunity for sophisticated investors that haven't got a huge budget to jump into the market, secure a good piece of real estate, and capture that short-term growth, which is really important because it gives you that stepping stone that you need. As an investor, I know that one of my first investments was, in fact, my first 3 investments were apartments. And they were great because the first apartment allowed me, it grew about 100K. I was able to pull out $50,000, $60,000 to then buy the second. That second investment grew about 120,000. I was able to pull the equity out of that to then buy my third. My third investment grew about $200,000. And at each of these junctions, I was able to use that previous investment to then buy the next. So if you think about investing or your investments as a means to an end, or it's extending your reach, your investment doesn't need to be perfect. It needs to just achieve your outcomes. So for all of you out there that have a limited deposit, can't quite afford millions as your next purchase, I certainly do think that Melbourne apartments will be a good opportunity for you to start your portfolio off and to kick you off to buying your second or third investment. Anyways, I hope I haven't dribbled on too much. If you've got any questions, let me know. I'll share these articles with you, and thank you for your time and attention. I'll catch you next week.